Good morning and welcome to Beyond the SEAF model. I'm Jack Kosar. This is effective for March 25th, 2024. Let's get started. The SEAF churn continues, kind of rotating through these different sectors. This week's signals are industrials, energy, and financials, moving on from technology and communication services. As this market continues to be overextended, we're seeing a lot of managers attempting to pick tops, and I believe that's kind of what's going on with technology and communication services, kind of having that quick reversal. We saw late money come in 2 weeks ago, and that money invariably flowed right out of both tech and communication services, and money, nicely sticking into energy, moving back into financials after a little bit of a break, and broadly staying consistent over for industrials. Really trying to pick out. I heard someone on financial TV the other day mention, and it really resonated that managers are attempting to pick tops right here, and that money is flowing kind of indiscriminately throughout the sectors as they have to stay invested because as the market continues to trend higher, and nobody invariably being able to understand when that top is, managers have to stay invested. So we're seeing that churn. And this kind of also goes into the fund flows that I've been discussing over the last couple of weeks and about how we're seeing a weakness in flows. That weakness in flows is invariably allowing the model to kind of churn through and find where the money is going faster. So we're kind of getting whipped around a little bit more than we would uh, normally get whipped around, and that has to do with the strength of the flows, not being as sticky as they have been in the past, definitely being below average. One key thing to note, technology really ripped out. Money came flying out of technology. We had a 0.75% decrease or net outflow. Similar outflow to communication services. Not seeing that exact same strength up in the top four here, but still energy coming in at a near average flow. So, definitely can see some consistency in energy. But as you can see here, this heat map isn't it's a bit of a Picasso painting this week, and we know that when we're in a Picasso period, we're in a period of transition again. So. Kind of keeping an eye on these things. I have a lot more rainbow charts this week. I really want to break down what we're seeing kind of broadly in the market and hoping by providing more depth into each rainbow chart, we can kind of get a better sense of what this model's doing. It's going to end up picking, where the money is going, and the hope is to pick the right sector at the right time to catch it for weeks at a time. Now we've been in energy for 2 weeks now. Ideally we catch a horse and we ride it out for a nice gain. And I think that's what SEAF is doing. So while we are in a bit of a period of churning, we are still going to where the money is, and it's just a factor of what the market decides where that money's going to end up sticking. So let's get right into our rainbow charts. First, I wanted to highlight financials. As we can see here, we're kind of bouncing around here. Financials stuck up in the upper favored ranking for quite a bit of time. We had a bit of bit of periods of indecision. As I said, money is kind of flowing around. Managers are looking for places to try to find that next horse. And because nothing's particularly sticking due to the fear of an eventual correction to the market, we are seeing this money kind of jerk in and out and you can see our rankings are kind of taking that into account as well. Positive thing with financials is we are having a bit uh, not a super steep slope, but a nice slope in relative outperformance, seeing a little bit of an uptick here. And we are testing an upward bound resistance that came back in December of last year. So ideally, getting a little bit of momentum here with financials can get us that relative outperformance that we're looking for. Next, into energy. Energy has a bit of a spike up here. We're seeing it kind of test the neutral territory and bounce right back up into favored. Broadly, energy was on a pretty steep decline over the last 6 months or so. But energy 2 weeks in a row with relatively strong flows, seeing that relative outperformance peak. Had a little bit of a corrective decline there, ever so slightly, but still net positive on the relative performance. Technology. We are out of technology after the big spike in money last week, and as we can see here, this is quite a bit more volatile than we've seen in past. We're sitting up and down, got into neutral, jacked back up by a large inflow of cash 2 weeks ago, and then had a really strong outflow in this past week. Technology obviously having a resulting uh, negatively sloped relative performance versus SPY, and broadly starting to develop a negative trend. This is after a very long sustained uptrend in relative performance. Potentially a little bit of frothiness dying down in technology as money starts to flow out. But as we've been seeing over the last couple of weeks, this very well could be a lot of managers just attempting to either pick the top in technology or take some profit here. While technology is still favored, we are going to keep an eye on this as we have been seeing a little bit of up and down movement in technology. Moving on to industrials. Industrials is looking relatively strong in the it's our top favored ranking for this particular week. We are seeing a nice going back to the end of January, seeing a nice upward relative performance trend. And after we check marked here, we are heading in a positive direction, almost breaking this resistance level for the relative outperformance for industrials. Broadly looking good. Industrials doesn't seem as choppy as some of the other sectors that we're seeing at the moment. Did touch down into neutral, but rebounded right back into favored on this daily chart. So positive look into industrials. Similar thing, materials is not a SEAF uh, signal for this week, but we are seeing a nice trend in relative outperformance that has been uh, kind of dating back toward the end of January. And as we can see here, this is also not as choppy. Money is flowing a little bit more consistently into materials. It's not quite as sexy of a uh, as a sector as technology or communication services is, but seeing that nice relative performance trend since the end of January, seeing this nice, slow, gradual increase in funds into materials. Um, for managers that are looking to get into materials, again, we've been seeing this nice slow trend. Money consistently continues to flow into materials. I think it's fourth in the ranking for this particular week. Um, Looking in, yeah, materials fourth, but we are seeing a nice little trend in the right direction here. 6 to 3 and 4. Again, materials is a little bit slow, but we are seeing money flowing net into materials for the last quarter, strengthening around the month, and still having a relatively decent flow in this last week or so. So, just keeping an eye on materials as we kind of get the steady climb up. We're not predicting more cash flows going in there next week, but definitely a place where if managers are looking to get involved, we are seeing this nice, slow, steady increase. And with the way that the other charts are looking in terms of really bouncing up and down, materials might be a good place to check as it seems to be a little bit more stable than some of the other industries that we're looking at, especially during this time in the market where we see money kind of shifting in and out quite rapidly, and not trending as much as we would like to see. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week. Everybody have a good one. Thanks.